Today on the CEO Barbecue, we're looking for uranium, vanadium, and a bunch of other stuff in Argentina and Colombia, together with Jaguar Uranium. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record, because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Jaguar's got two projects in Argentina and then also one in Colombia. It's about an even focus split as far as I understand it, or maybe it's about a 51-49 ratio between Argentina and Colombia. But in Argentina, their portfolio includes the Laguna Salada and the La Posada projects in the Chubut province. And at La Rosada, the presentation says they have a near-surface historic deposit with large exploration upside and metallurgical testing about to happen soon. How big is that deposit? It is a historic deposit, and what is it exactly, and how are they going to follow up on it are, of course, going to be part of the questions later on. In Colombia, the focus is on the Berlin project in the northeast of the country, specifically the Caldas department, and it's already got 24,000 meters of historic drilling on it, which so grades as high as 0.12% uranium, 0.5% vanadium, and up to 10% phosphate. Again, this is historic drilling, though, so it is not current and should be considered that way. But it looks like this is a phosphate-hosted multi-element system. But Jaguar believes they can get more out of the existing exploration data, which, of course, I'll be asking about later on. Now, for a little bit of some numbers and a little bit of details here, really, Jaguar is listed as JAGU. So that's JAGU on the NYSE American. So that's the New York Stock Exchange American. As of, really, it's about to be listed in probably 45 minutes or something from now. We're recording this on the 10th of February, about an hour or something before they're actually trading. So that also means I don't really have much trading data to go over here, but the initial news release says that they're offering 6.25 million shares at $4 a share for gross proceeds of $25 million before offering expenses, as well as an option for the underwriter to increase the purchase price, the purchase amount by 15%. What exactly that money will be used for, who's buying all that stock, and what does this raise do to the overall share structure are all going to be part of the questions later on is in the conversation. But for this to actually become a conversation, though, I'm going to have to shut up already. And Steve, I'll give you the word here. But first of all, thank you for sitting down with me today.
Thank you, Antonio. Great intro. Thank you so much.
I appreciate that, and I am looking forward to going over some of the basics here in a minute, because there really isn't all that much out there to read outside of the historic report. But maybe just before we get into all that, this is obviously a serious program for serious speculators, so I'm going to start off with a serious question. How do you like your steak?
Seriously, medium rare.
That's the only right answer there.
Right.
Jokes aside, though, we will do a deeper dive into some of the details here later on. But this is the CEO barbecue, so I got to know how you like your steak. Let's set the stage here, though. What is the goal for you? What do you want to do with Jaguar Uranium? What are you building? Is it a raise, explore, sell type of business, or are you looking to develop any of the assets that you have right now? What do you want to do?
Yeah, it's interesting. When we started the company, the idea was that we had seen uranium as a multi-decade market as far as pricing and supply deficiency. So we had talked back in 2023, what exactly is it that we want to be when we grow up? And the idea is that we wanted to have a package of assets that would be able to sooner than later contribute towards that expanding supply deficit. So for those those watching here, just for some context, the current supply deficit is about 5 to 7 million pounds a year, expanding to about 197 pounds on a deficit, 197 million pounds into 2040. So it's interesting because if you assume every single mine that is planned, and that's not every single mine that's financed or permitted. If you take every single mine that people say they want to put into production, that supply deficit reflects the benefit of the doubt that those mines are getting into production. So it's my bet that the supply deficit will be much more accentuated. Within that context, to get to your question, Antonio, our view was that if we can acquire assets that to use a North American baseball analogy, in the second or third inning, then we have the potential to take assets that had been there before. Maybe they've been in production, maybe they've had substantial exploration work done on it. The idea would be ultimately to be in a position where we can bring those assets back into production sooner than later. So in that context, we'd acquired an asset in Colombia and then 4 assets in Argentina, 2 of which are on the exploration side, as you had mentioned, and 2 of which are past producing assets. So the idea here is to reestablish what had been done before at these assets, put it into a position where we will ultimately make a production or a reproduction decision. I've invented that word because I think that these assets that had been there before have the potential to come back into production. And rather than sort of a grassroots situation, the idea here is to build up these assets. Are we prepared and are we equipped to bring these assets into production? We are, certainly with the benefit of surrounding ourselves with really experienced and amazing people. But consequently, when you look down the road, there's definitely an investment thesis that the larger mining companies in the uranium space, and by the way, 5 countries represent 88% of global supply, those countries are ultimately going to have to look elsewhere to replace what they've depleted. South America has never really been looked over from a uranium standpoint. So when we sort of look internally of what we're trying to do here, we're trying to take this package of assets, work on the amazing work, intelligence, and capital that had been done before us, and bring these assets back into production at a point really where most experts see uranium price hitting triple digits over the course of the next 6 to 12 months.
Mm-hmm. I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terahutton.io. And again, we'll go into some of the details of what you're seeing here in a minute, specifically on the project level and whatnot. But since this is the first time you and I are talking, this is your first time on the CEO Barbecue, we'll have to take a step back and go through the smell test first and then some history. Smell test really aimed at understanding the incentives and the track record of management. And I'm going to start off with yourself and your track record. Steve, who are you? And have you made more money for shareholders than what you've spent during your career so far?
Yeah, it's funny. I look back, I graduated from university in 2001, and the intention at the time was that I was supposed to go be a lawyer. It was determined by my family that I would go be a lawyer, whether I wanted to be a lawyer or not. I disappointed everyone and decided to go into finance. We were coming out of the tech boom, and I didn't really fully understand the sector, but I knew I wanted to be part of it. So I had spent about 10 years working on the buy side in the time was a quite prestigious natural resource focused fund, which was really one of a kind at the time. There are many now, but co-ran that fund for about 7 years, and ultimately went to the sell side, worked as an equity analyst. So I covered all spaces of the capital market side, and then joined a client of ours, a drilling company. It was actually the second largest drilling company in the world. Became their chief financial officer for about 8 years. We had lots of success there, operating in 26 countries. Accidentally, I became very good at South America because that's where bulk of the company's activity was. And I say cut my teeth down there. And then ultimately, over the course of the last 5, 6 years, been I'd say blessed with the ability to have been surrounded by amazing people with great ideas, and took the leap with some partners to ultimately found Jaguar. And as you mentioned earlier, we're embarking on, as this video is being recorded, we are minutes, if not an hour, away from listing our shares. We've come a long way. My mother always said it's better to be lucky than good. We're looking at this from the standpoint of being in great jurisdictions, and we're having a lot of fun.
Mm. Do you currently hold any other executive or board positions with other companies, or do you do anything else?
No, I don't. This is definitely a full-time job, and my wife will attest to that.
You don't do anything else, not even the dishes? Your wife must be happy.
No, I think I do contribute when we get the look, so we all know to go help and contribute. And I'll never be known for my cooking, but I found that I think for the most part anyone would prefer. It doesn't have to be good food; they just have to know that they don't have to prepare it. So if I could throw my 2 cents in, and when it comes to cooking, I'm good at a lot but great at nothing.
Some life advice for you there.
That's right.
That's appreciated, especially in my situation. I do want to talk about incentive too, though, which I believe skin in the game is the largest part of incentive. How much of the company is still in the hands of management, or is going to remain in the hands of management after this IPO run here?
Yeah, so going into the financing, about 8% of the company was owned by management. At a time, it was 100. It was just a handful of us that really had founded and put our own money into it. In my case, I like to say I put money I had and money I didn't have in it, and to take that a step further, for those out there who have I hope great relationships with in-laws. Putting your money in your project is one thing. Putting your father-in-law's money into it is a whole other thing. So rest assured, I'm incentivized for nothing other than I married his daughter.
Yeah. How did those shares come to be in the first place? Like yours and everybody else that you've put in, was that kind of a founders round? What was that done at? What's kind of the average cost for your shares?
Yeah, so there was a founders round that actually predates my coming in. The company had been founded initially about 3 years ago with the intention of, broadly speaking, doing something in South America. There were a couple false starts. Eventually, over the course of time, as we acquired these assets and I had come in, we had done listings in the area of $2 and $4 and frankly $5 a share. So we've participated in all of those financings. Over the course of time, we've found some high net worth individuals and thankfully two, let's say, very prestigious uranium focused funds out of New York. They're well known. Forgive me, I won't mention the name on the video out of respect for them, but they came in and saw the potential earlier. They actually had seen one of the assets a long time ago when the previous owner had owned it. And they've supported us in every single financing right up to now. So when you look at sort of the average price per share that's been put in, it's going to be somewhere around the IPO price right now at $4. So what I say to our new shareholders who came in on this IPO that, as I said, would start trading this morning, we paid what you paid, and in some cases we paid more. And we're big believers in it. And as I said earlier, we put our money we had, money we didn't have, and our family's money into it, and it better work out.
Well, what I'm looking for here, besides skin in the game, is cheap paper as well. I think knowing and understanding what the supply and demand dynamics of the shares are is important as well. So, is there any, or how much of the float would you consider as cheap paper outside of what management owns, or either within the shell, or however you got started in the first place?
Yeah, sure. So it's definitely a straight IPO. There was no shell. There was some cheap paper in the first round. It's been about, I'd say it was about probably about 25 to 30% of the total amount raised as a private company. I'd say about 60% of the, call it near $6.5 million that was raised was done at about between $2 and $5 a share.
Right. Okay. So like, there's not like a penny stock or anything like that, half a penny stock.
There's no stock like that. But what I would say, and this is important, company has about 13 million shares outstanding heading into the IPO. Of that, just for comfort for new shareholders and hopefully potential shareholders, 100% of that 13 million shares, except for 10,000 shares. There's one guy who has 10,000 shares, but all of the 13 million shares, except that 10,000 shares, are locked up. The only free trading stock is going to be the IPO and that 10,000 shares. So one of the things that I was cognizant of, I've been in junior mining for 26 years. And one of the things that always irked me was the cheap stock. Do new investors have a wall of paper coming at them? And we felt that yes, there is some cheap paper out there. It's by far as a percentage much less, and I think than many of the stories that come out. But what we did was protect the new shareholders from that occurrence, because that is certainly something that can kill a deal. So it's a bit of a long answer to a short question. As I said, it's about 30%, 25 to 30% of that of total amount raised was done at those cheaper levels, but they are locked up for some time.
What is that sometime? What does that look like more specifically?
Yeah, it's 4 months to 6 months. The bulk of it's at 6 months, and then management, which I am not part of that cheap paper. I came a bit after that. Management, of course, is locked up for much longer, obviously being in a position that we can't sell. Another thing that I also wanted to mention is that 60%, this is probably should have started with this, 60% is owned by two companies from whom we purchased the assets that we have now. One is ISO Energy, which is, of course, everyone knows, $1 billion Canadian uranium company. The other one is called Green Shift Commodities, GCOM, they call it. So those two companies, which are they are separate but have a lot of sort of crossover, and their executives and their supporters are all involved in that 60%, and they're locked up as well. And they have nominees on the board. So from our standpoint, we see that stock is locked up because as insiders, and such a substantial position, we see that stock not hitting the market.
Mm-hmm. Yeah, well, that's a good explanation. That would have been my follow-up question as well. But what does that mean? Like in 4 months, how much of the stock comes free trading in 4 months after the IPO?
Yeah, if I had to say off the bat, I think it's about 1.8 million shares. Would be about that, 1.8 to 2 million shares.
Out of the what are you going to end up? What are you actually going to end up having at? Like in the end, what is it? Warrants and options, like fully diluted. What would that look like?
Yeah, it'll be about 19.5 million shares.
Nice. So like 10%. Okay.
Yeah.
Wait, that's fully diluted, including warrants and options.
Warrants, everything. Yeah.
Okay.
What
is the warrants and options situation here?
Yeah, so with respect to the warrant situation, there's about 2.9 million warrants. Those are also locked up in the same provisions as the initial shareholders. So those would be locked up as well. So those warrants have an average exercise price of about 286 a share, and then the options, almost the entirety of it is held by management directors, consultants, geologists who have helped us along the way. That's about 858,000 at an average exercise price of 389. So, and again, that's an average. So there's a good chunk of that is not in the money. So the idea is that, we handed these out to keep bums in the chairs. And when you look at sort of the entire mixture, you're looking at about just under 3 million options and warrants on a combined basis.
Mm-hmm. Talking insiders, do you or any of the other insiders personally own a royalty in any of the projects you have?
No, we don't.
Right. Well, I think that about this is for the smell test. I want to move on and talk specifically about your projects, but I like taking a big step back in first time interviews, and even more so in your case, because as I mentioned at the beginning, the assets you're sitting on have been looked at before. They've been drilled before, yet they haven't yet been developed. Right? They somehow ended up with you as well. So, yeah, take me all the way back to whoever first held the assets. What work they did, and more importantly, why would they drop them?
Yeah, I'll actually start with the last question. I get this asked all the time. If it's so good, why did someone give it up? And it was really just owning it at the wrong time. Uranium price has been volatile over the course of the last, let's call it 18 years. There's been peaks and valleys. There's been events like Fukushima in the middle that caused a multi-year sort of bear market. And what had happened is that companies had owned these assets and others that had really had spent upwards of tens of millions of dollars developing these assets, and just sort of ran out of money at the wrong time. So the asset we have are no better than they were. It's just we own them at $88 uranium, and they own them at 12. In Argentina, it's a bit of a different animal. These assets had been previously in production and mined and by the Argentinian government. And they decided that when uranium prices had dropped really to single digits in sort of the 70s and 80s, that they would abandon the mines because it was economically in their interest to import uranium. It was the right call. Well, fast forward to today at $88 uranium. Believe me, they wish they had it back. And that actually ties into some of the benefits that we have now, because they want to see these assets in production as quickly as possible, because while they abandon the mining side in favor of a proper economic argument to go import it instead, they've kept 3 reactors online. So the country is motivated to help private enterprise bring these assets in production. So that's a broad view, but what we'll do now is just focus on the assets we have and how we got them. And I'm going to go a bit in reverse order. So the Argentinian assets, we have 4 assets total there. 2 were in production, 2 are exploration properties. All of them fit the bill of sort of that second, third inning kind of mentality. So there's 2 assets that we have in the Mendoza province, which most people would know for the wine industry, but is actually an exceptionally active and pro-mining jurisdiction. And so these were 2 assets. One of them was a former mine, came offline because the price of uranium went down to $8 a pound. Government abandoned it, said, let's go import. Another area is called the Sierra Pintada district. Sierra Pintada was the last producing mine in Argentina, a district rather. So the first mine, Humul, that I just talked about, was in production. That was the first mine in Argentina. And then we have this district that had been producing up until the late 90s. So we've bookended that sort of mining exploration phase that the government had gone into. So we look at those and say, we know that the government didn't leave for geological reasons. We know they didn't leave for metallurgical reasons. We know they just left for price. So it was always just a price problem. 2 other assets, and I'll get to how we acquired them. 2 other assets are exploration assets that you had mentioned in the province of Chubut. The area is massive. There's upwards of almost $20 million having been spent on these before, and really again, it's just wrong time, wrong commodity price. Assets came available as a package. ISO Energy owned them before, and ISO had made a strategic decision about 4 years ago that they were going to focus primarily in the United States and Canada and overseas as well. But this package of assets was something that, in the grand scheme of capital allocation, it would be better for them to sort of parcel it off. So we approached them in 2024. We bought the package from them. We paid, just for sort of context, they took $5 paper from us. We paid about $12.5 million in shares for those 4 assets, and have inherited obviously a tremendous amount of data because these assets had been there before. Moving over to Colombia, that was the first asset we purchased late 2023. The idea was at the time, this asset was really, it's really a crown in South America when you look at sort of uranium potential. When we had looked at it, it had 4 previous owners over about 15 years. The previous owners combined had spent upwards of about $30 million on the property and had drilled just one third of it. So they had drilled one third of it, about 24,000 meters of drilling. Commodity price sank after Fukushima. Asset basically went into care and maintenance, and we picked it up for mostly milestone payments and some shares as well. So when you look at the combined assets, we purchased them all for the same reason. They were available as the uranium price was sort of ticking up. Previous owners either couldn't raise more money for it, had fallen out of favor with the government, but nothing ever had to do with its ability to actually become a mine or have a resource at some point. Historically, there have been substantial resource estimates on these assets. I can't speak about them because they are historic, but we have good feeling that the resource can get up and walk away. And within our minds, these are assets that we now own at the right time, right place. South America is by far the next frontier. It is the frontier. Argentina is arguably the most investable country on the planet, having come a long way from 2024. The partnership between the US government and the Argentinian government is in complete lockstep. We see it, we feel it on the ground. So sort of get back to your question, the idea between how we got these assets and what we want to be when we grow up with them really centers around they were available. We had sort of made that multi-decade view on the uranium market and picked the right jurisdictions, and here we have them today. The previous owners hold NSRs. They believe in the projects. They are shareholders. So I think that we're in a really great spot given sort of the supply deficiency we are seeing expand and in countries that I think people can feel comfortable doing business in.
Mm-hmm. And if fast forward to now, we will talk about the political situation and whatnot in hopefully in both Colombia and Argentina. What is the ownership situation right now for you, though? Do you own 100% of the assets? Who owns what? Royalties, other rights, right of first refusal, off-takers? What's the situation?
Yeah, so we own 100% of all 5 properties. There are NSRs of between 1 and 2.5%, depending on the asset and depending on the piece of, like, for example, Laguna Salada, one part of it has 1.5%, one part has 2, but very sort of typical 1.5 to 2% NSRs. The idea behind the mission of our company was always to own 100%. But those groups do own 60% of our company, so they'll participate in the upside, probably with providing us assistance as well. They know these assets quite well.
When you went through that whole process and everything else, are you inheriting any liabilities, either financial in nature, environmental, or anything else?
Yeah, so nothing environmental. Financially, yes. As I mentioned, certainly in Colombia, actually. The asset had been put on care and maintenance. That didn't mean the government didn't stop charging their taxes. Everything accrued. So part of the deal was that we would wipe out and pay that debt down, which we have. In Argentina, there was nothing environmental or social or financial tied to them. So we really came to market with really a clean package of assets that have a great shot because you're betting on these assets having done it before. And from that standpoint, we go into this saying we've controlled what we know, being financial debts and so forth. And I guess we embark on the great privilege of exploration to find out what we don't know.
What's the community situation though, Steve? How many communities you're dealing with, and maybe kind of take me, project by project, just as you did across the portfolio. What kind of agreements are in place? Who are you dealing with?
Sure. So in Colombia, the Berlin asset, again, this asset has substantial history. So the communities that surround it, there's one primary community in a small town. I think nearly everyone works or indirectly touches the economic benefit of even the exploration plan, not to even mention what's going to happen when there's a mine. This is in an area called Caldas. Caldas in Colombia is like, they call them departments, whereas obviously in the United States, they're states, Canada, they're provinces. they call them departments in Colombia. And the department of Caldas has been mining for centuries, so 500 years. A lot of the gold and silver, mostly gold, that was mined there 500 years ago was during when the Spanish had come over. And so the communities are generational. They're very good at it. They know the land. They're very supportive. They're pro mining. But we recognize, of course, the world changes regularly, especially when you don't expect it. There are definitely let's say concerns, but there's some. We know that from a social standpoint, from an environmentalist standpoint, that there better be no corners cut, and that's something that we've having done this for decades, we've become quite good at. In Argentina, a little bit different. There are the two previous mines, or the mine in the district. Those are in areas that, they're populated provinces, but the assets are off the beaten track. But again, this is going to be more an issue of, when these mines ultimately get back into production, hopefully, we're going to need a tremendous amount of labor. And that's something that in South America, people are competing for. So we hope to be able to bring that. So the challenges we face are not from, anti-mining or anti-environmental standpoint. It's coming more from we support you to develop it. The economics are in our favor. But there's going to be growth challenges like any other company, and the idea is that we're going to include these communities that know these assets. In Colombia, they've seen this thing been explored for the last 18 years, and in Argentina, they've seen these assets in production since the 1950s, so they know it and they know it well. There's the exploration assets in Argentina believe me, these things are off the beaten track. I'll take you there one time, Antonio, and hope you don't need your cell phone because you're hours away from that service. We do bring a Starlink, but kidding aside, it's an exceptionally remote property that has one national highway running right through the middle, which is all we want. We want to be able to get there. We want to know that when we develop this thing, we're able to bring it out and be in a position that we can explore it without any disruption in the meantime to any community. So, as I said, the issues we face will have more to do with growth, and hopefully we'll be at that point that we can face them head on.
You got to be careful with the kind of promises you make on camera because someone might take you up on it.
Okay.
No.
I do hope and dream like the others. I'm a believer. God makes plans and we all laugh, or he laughs. So
true.
These are our plans. Yeah.
No official agreements though that you have in place, or is that even needed?
No, it's not that. It's not that kind of thing. The best we can do when we're not active from an exploration standpoint is keep the communities updated. They demand to be updated. They come to us with questions, and we have, not have to. Of course, we have to, but we want to communicate with them. In Argentina, there are areas that's a bit different because they are much more, in some areas, much more pro-business. But no, it's not the agreement we have are sort of social agreements where, we don't disrupt them. They help us if we're able to include them. They like the economic benefit, but we know we are guests there, and we better do well by them.
Yeah, yeah. Let's maybe look forward then in that case with you now. What is it that you're chasing in Argentina? How big is the potential size of the potential prize here is what I'm wondering. What's your exploration target size, if you will?
Yeah, so the two assets that had been mines, so those are really exciting because our ability to chase a reward there has a lot to do with what they've done before. So with the caveat of the drill bit tells all, and again, this is don't pin me to these numbers. This is a lot of back of the napkin, hope streams, formations. If they look like this, then that. The previous mine had been mined something in the order of about 15% of the total resource. That's the estimate. There's potential for 80 to maybe 100 million pounds there. We don't know. It could be a lot less, could be a lot more, could be that. But this is sort of what we're hoping for. We see these assets as something that we can produce 2 to 3 million pounds a year from for 20, 25 years. Elsewhere in Argentina, especially at the exploration side, I mean, the previous owners had identified, fairly substantial resource. Of course, we can't stand in front of that being historical, but we think that alone could also have another, call it 80 to 100 million pounds. So what we've done in Argentina and in Colombia as well, because the asset that we're exploring there on just 1/3 of the property, this thing has, we think, potential of up to 75 million pounds. So the idea here is that the rewards are large. We have a lot of intel. We're going into with this that we can sleep well at night knowing that they've been there before. But let's assume everyone's totally wrong on one of them or two of them. That's why we have 5 assets, so that they can all get exploration capital thrown at it. But we'll know in the next year and a half to 2 years what's working and what deserves a little more spend.
Mhm. Yeah. When would you be looking to do an updated MRE to replace whatever historical data there is?
Yeah, we are hoping sort of second half 2027. That'll all depend on how quickly we can move rigs in and permitting and so on and so forth. But that would be a nice target for us. In the preparation for our IPO, we had to go through all these different sort of studies and so forth and work with our engineers. And really, they came up with sort of that game plan is reasonable. So I think the market could hopefully expect between sort of now and the end of 2027. In Argentina, probably much of the same. For the most part, over the course of the next, call it 3 quarters, we're going to be working through permitting and so on and so forth. But the idea is that all 5 of these assets will have some exploration activity at each of them, and then we can make a decision as a company which ones deserve a little more love, as they say.
Mhm. Well, when it comes down to historic data, what do you have? Did you have the core, or what kind of data do you really have?
Yeah, in Colombia, we have there had been 24,000 meters drilled. We estimate we have about 18 to 19,000 meters of that core in our hands. So it's in our core shack. We've reassayed some of it. A lot of it matched up with the previous data. So that's obviously great intel to go and to have to drill 18,000 or 19,000 meters on our own. Never mind the cost, the time, and that goes back to these. We're in the second, third inning of exploration on this asset. Lots more to come, we believe, but enough that we can have sort of our foot across the start line. In Argentina, I think we're in a really advantageous position. And I say that because previously, as I mentioned earlier, these assets had been owned by the government's nuclear energy board called the CNEA. CNEA is the name. And they have all the data on all these assets, and the CNEA still exists, but have a bit of a different mandate. So what we'd like to do is go partner with the CNEA and say, look, you have a tremendous amount of data on these assets. You've owned them before. It's in the country's interest and your government's interest to see private enterprise like ours move these assets forward. So that is really a scenario where we're really at bat with a ball coming right down the middle. I think that we have a chance to be able to fast track exploration for what we know to be true and then work on what we don't know. So having all this data and how we interpret it is going to be another story. I was actually talking to someone this morning, the data that we're going to inherit from hopefully the Argentinian government is going to be a lot of binders. Don't forget, this is from the 60s, 70s, and 80s. We're hoping as we tie it in with different data analysis systems and AI that we'll have a good picture of what they know and hopefully work with them to find out what they didn't know.
Mm-hmm. Well, having set the stage in terms of what you're really after, there's 3 things I really want to talk about or want to know, and specifically about your flagship, or not maybe a flagship project, but maybe the more advanced one, Berlin and in Colombia. So, and what I want to know there is time, money, and risks essentially. And I want to kick it off with, and we will be back to Argentina, but I kind of want to take it from Colombia. But I want to talk about time first. How much time, or better said, how many drill seasons could it take to get there in terms of size?
Yeah, so it's a good question. It took about 3.5, 4 years of drilling to get their previous historic resource. A lot of that was determining where they were in order to be able to know when to drill. They've obviously had a lot of misses. They were grassroots. We are not. We go into this thinking we see the asset in sort of three thirds. One third that's been drilled. That's where the historic resource is. Then there's two more parcels. We think we can use the data from the first third and move into the next third and cut that exploration program down to about 2 years because we know so much about it. We have the benefit that they didn't. They went in blind, tremendous discovery. We just don't have to do that. So I look at that and say, within that context, I'm hopeful that we're able to prove up what the previous owner thought they had, expand it with what we're going to work on. And that's what gets me sort of that end of 2027 potential to have an MRE out on that asset. And that would be quite substantial because there's been feasibility studies there as well and rare earth components. I mean, that would be really, really special in terms of pounds on the balance sheet.
And that's in Colombia. What about Argentina? What are some of the catalysts that you're chasing there, and put some timelines to them as well?
Yeah, parse them off in sort of two parts. We have the package of the two assets that had been there before, and then we have the two assets that have been explored before. On the assets that had been there before, that will be something that'll probably take, I'd say 2 to 3 years to get a sense of ultimately how big this could be. It's funny. Like I think the longer it takes to figure this out, potentially that means that we're just finding more resource and it's just taking more time to figure out what the big number is. But given the intelligence that we have about what these assets had done in the past, we could be in a position where we're able to, deliver an MRE on at least two of these assets by, call it end of 2027, maybe into the next year. Obviously, behold me to nothing. This is all hopes, best guesses and wishes. But we're definitely in a situation now where I think that we'll be able to see drill data come out over the course of the next year and a half, get to these milestones where we want to be able to make a production decision over the course of the next 3.5 to 5 years, as opposed to 7.5 to 9 years for a more grassroots project. So this really is fast track stuff.
Yeah. And then in terms of money, I understand it's often hard for explorers to look for, multiple seasons into the future, given how many moving parts there could be. What about the immediate future here? What's the budget? Let's say with the money that you're raising right now, what's the plan for the spend?
Yeah. So the money we're raising now will give us about 2 years of runway. It'll allow us to throw some money at each of the 5 assets. With the ability to say in about a year and a half, okay, what's working? Let's put more towards this asset. All of these assets have the potential for expansion. So that would be the idea with the current amount of money raised. It's about $25 million. I think having seen this, done this, been part of it, analyst and banker and portfolio manager, it's an exploration company's dream to be in a position to say, we have this discovery, let's accelerate the drill program. And so I sit here telling you the money we've raised, investors should have comfort that will last us about 2 years, and every asset will get some love, exploration capital. But by the same token, if we're successful, we'd love to be able to go back and tell these investors, hey, seeing something exciting here, and hopefully having added shareholder value, would be in a position to accelerate that. The primary goal here is to bring these assets back into production. Mm-hmm. From a money standpoint, we look at this, there's going to be an exploration phase and a development stage. We are very firmly in the exploration stage, but hopefully we get to the point where we're talking, how much is it going to cost to build these mills? How much is it going to cost to build this infrastructure? And we're in a position to be able to do it.
Yeah. In terms of split in percentages, where does the money go in terms of Colombia, Argentina, and so on?
Yeah, we're looking at about 60% in Argentina, about 40% in Colombia. That would be if we looked at the entire budget. We reserve the right to, of course, change it. If Colombia is working, we'll pull some from Argentina and vice versa. We won't know that for about a year and a half. But of the total amount, I mean, the lion's share, and we're talking 85% is going to go towards exploration. Management is extremely frugal. and we're cognizant of that. Obviously, post IPO, every dollar should be going to the ground, and frankly, every exploration company should be taking that view.
How frugal is frugal? How much do you think you're going to spend on non exploration activities?
Yeah, I think corporate expenses and whatever, you're sort of looking somewhere in that sort of, I'd say $3 to $4 million. The largest expense that a lot of mining companies, public companies, are seeing right now is just the cost of being public.
Mhm.
So from our standpoint, the bulk of that is reserved from that. From a salary standpoint, if that's what you're asking, what we pay ourselves, we all want more money, but we recognize that our wealth will have to come from success in the ground. Uh, Investors have given us money to go spend on drilling. We've said this publicly, officially on the record. That money is going to go in the ground.
Yeah. So what would that split be in terms of how much it goes in the ground versus and not only G&A, but let's just call it non-exploration. Is it an 80-20, 70-30?
Yeah, so we'd be, of the 25 million, we'd be looking at about 17 to 19 into the ground. The 25 million, the remainder from 25 to that, call it 17 to 19, would be G&A. But I'd also say, keep in mind that 25 that we're raising is not net of fees. And a lot of people have to get paid at, the industry is what it is. So obviously lawyers and bankers. So we estimate that sort of after fees, we'll be in a great position to be able to deploy that 17 to 19 in the ground, but we'll have enough capital left over to really attract. I'm not a geologist. I like to say I know enough to be dangerous at a cocktail party, but we have to spend money on hiring a great team who's going to deliver pounds on the balance sheet to investors and get these assets to that point. And so, from a budget standpoint, we are always looking at about 80% of the money to go into the ground.
I do have a question about the team and the number of assets and how you manage that for sure. What about marketing? What percentage of the money that doesn't go into the ground are you going to spend on marketing? What exactly are you going to do for marketing?
Yeah, I mean, there's obviously an IR budget. We are a public company. We are cognizant that we have to get the word out, and so we're very obviously focused on that. As far as where those dollars go, it's our intention to, broadly speaking, get in front of as many people who would care about this and tell them that. That doesn't mean get in front of as many people as possible, because that's easy to do. We intend to spend money efficiently and find investors and potential investors and partners who are keen to see that. We're very cognizant that we have shareholders who supported us the whole way along, and shareholders who are coming in now and will continue to support us. And we have to do well by them. At the end of the day, the shareholders' goal is to make money, and it's our job to make sure we've made that as efficient as possible.
Mm-hmm. Is there an absolute amount of money that you're looking to spend, or what would that look like?
Yeah, right now our budget for IR is somewhere in sort of that 500,000 to 700,000 mark.
Okay.
Obviously, as we complete the IPO, we'll firm up our budget, but that's sort of where we're at right now.
Yeah. Okay. And I guess over time you're going to be news releasing some of these things as well, so we can talk about that maybe in future conversations. I want to move on to risks, Steve, which is obviously every CEO's favorite thing to talk about. But this is mining, so we will have to talk about it, and we have plenty to talk about too. Kicking off maybe with the rocks, and again, I'll go to Colombia, and then we move on to Argentina. I understand you're not a geologist, but the historic technical report, which I looked at briefly before the call, seems like there's multiple associated metals again. So it's not just uranium, there's vanadium, phosphate, nickel, rare earths, and others, as I said. So what do you know about the metallurgy of this at this point, of what looks like, again, a phosphate-hosted polymetallic deposit?
Yeah, in Argentina, but just to focus on one asset in particular, there's a 2% copper byproduct at Humul. This is that first uranium mine in Argentina. It's funny, actually, there was some contemplation that this would be a copper mine until the uranium became so prevalent. So we have that great side as well, and we look at that from not being in the copper business, but we want to be in the uranium business with low costs, and that's where we see sort of that contribution coming from. In Colombia, the byproducts. I mean, this is a substantial rare earth deposit. It is a uranium deposit, but it's also a substantial rare earth deposit. We see that as being a tremendous contributor that will allow the company to, heaven forbid, withstand a severe bear market and still be profitable. We don't see uranium prices going in that direction, but we do see ourselves, hopefully, feasibility studies being to obviously the determination here, but we think that the rare earth side of it, if we're able to successfully capture it and find a home for it, we'd be in a great position, whether it's vanadium or phosphate or neodymium or cerium. There's a lot of potential here to meaningfully dent that sort of cash cost side and see this mine one of the most profitable mines we think along the cost curve.
Mm-hmm. So the current work does show you then that those other stuff that's recoverable as well, because I mean having it in a deposit doesn't necessarily mean you can recover it economically, right?
That's right. There had been metallurgical tests by the previous owners. They were very, they had seen them as favorable. We don't stand behind any of their work, but if one were to gander back at some of those reports from over a decade ago, they'd see what they thought. And yeah, the metallurgical tests had indicated recoverability to the point that separate from the uranium side, because that they had proven. The rare earth side is quite interesting, I think, because you have the ability to sell that not even as a refined product. We can sell a slurry, we can sell a waste rock. So there's lots of avenues to capitalize on that. As long as we're not primarily in the rare earths business, we don't have to do anything other than make sure that we find some economic value for this, and hopefully as much as possible.
Mm-hmm. And from processing perspective, what kind of processing would it take to recover the uranium as well as everything else? Like I know it's early to talk about these things, but again, I'm trying to think about how economic is the whole potential situation here.
Yeah, I mean, I think that each of these byproducts would ultimately have a different home. Some would go to the U.S., better suited to the U.S. Some would stay domestic. It's hard to say now. That would be subject to larger studies. But we know that it's there, and we know that it has a ready market. It's just a hard question to answer right now.
Right. Yeah. Is there, well, I suppose in the sake of time, it might actually be good to have you back on at some point with maybe your VP of X and talk rocks more specifically. What about politically? What are the political risks and wins? What are political wins in Colombia whispering to you right now when it comes down to mining?
Yeah, so in Colombia, the current administration at the federal level is left. In Colombia, most of the implementation of success at the mining level is done more at the municipal level. What I would say encompassing in that, I had spoken earlier about the department, the province, state, the department we operate in Colombia called CALDAS. Some of the viewers here may be familiar with two companies, Collective Mining and Aris Mining, two incredibly successful gold projects that over the course of the last 3 years have each become on their own multi-billion-dollar market caps. And I say that because from a political standpoint, you could read 20 articles and get 30 opinions. What we know is that these are two companies under the current administration that have successfully gone from small cap to $2.5 billion market caps. So we point to that to say, politically, it could be done because these companies are getting their permits, they're getting their support, they're getting rigs in, they're getting the labor force, so it's working. Mm-hmm. Argentina is really, I'm a bit escaping words right now. It is nothing like we could have dreamed of. Or to actually go the other way, it's become something we couldn't have dreamed of. We would never have forecasted the relationship between the Milei government and the U.S. Trump administration. It is incredibly pro-business in Argentina now. It is the number one, it's the fastest growing investable country in the OECD. It is, inflation has been cut by about 95%. And you're seeing a scenario now where the American influence in South America and in Argentina in particular cannot be overstated. We feel this on the ground. When we talk to the mining ministry, when we talk to the foreign ministry, we see it, we feel it. Argentina, and I say this respectfully to other countries who are doing a great job of opening up their borders and increasing the business sort of climate in country. Argentina is far and away, I'd say, the top country in terms of where new capital is going to end up going over the course of the next several years. And that was just rubber stamped again by the most recent election they had in October.
Mm-hmm. And in terms of Colombia versus Argentina, I mean, if you had to pick a favorite child, who would you pick?
I love all of my kids equally. They're just different. Let me answer you this question. We're taking shareholders' money and we're comfortable investing them in both countries. There's different approaches, but we think they'll all get the same results. Or they won't, but the process will ultimately be something that we think we're safeguarding the shareholders' capital and being able to do it. There is no favorite. They're just very different.
I ask that question because in one of the summary points in the 2024 technical report, SLR said the main risk to the property is the potential for the state to rescind the concession contract. How come? What could really happen here? What do they mean by this?
Yeah. So are you referring to Colombia?
Yes. Yep.
Yeah. So at the time, there was that debt still on it that we had inherited and it hadn't been paid. Since 2024, that debt has been paid. And the concession is three different parts. One we own outright, one we own in application, the other one we are in application. So every one of these are not in a rescindment position. The one that they were referring to, that debt had been taken care of, and I believe it was just over about $1.2 million that had been settled in late 2024 and early 2025.
Right. Okay. So there's no real risk for losing your project then in that case.
Look, I as far as I know, no. I hope I don't have to change my mind. We're in touch regularly with the government, mining ministry on an almost weekly basis. There's always a risk. Every deal has its risk. Every property has its risk. But the government has received all the money that they're owed. They're offering us permits. I like to think that that's a good indication that they want to see us succeed and don't plan to take anything away.
Mm-hmm. Well, there's the fact that it's uranium, which is, of course, more politically sensitive than, say, gold. Does that change anything in terms of permitting?
Yeah. Sorry. Well, not as far as permitting. In Colombia, the government is treating it much in the same way that they have done gold. They have a process that they follow, and they're going with it. They haven't changed it because it's uranium. The community needs to be educated that, first of all, this isn't gold, and that's important because the community, this is a gold mining area. So we got to educate them that, look, the economics here are uranium, not gold, and that takes time as well. But from the standpoint of permitting or policy, I mean, the government is following a decades-old mining policy as far as permitting is concerned, and nothing has changed. If we're lucky enough to be able to get to the point of production, I'm positive, like every other country, whether it's Canada or Argentina, there will be safeguards put in place to how to move the product, and we hope to cross that bridge when we come to it. Mm-hmm. Whereas Argentina is a little bit different. They've been doing this since the 1940s. Their uranium framework, permitting plans, transport, so on and so forth, is very well established. It almost entirely mirrors what they do in really in Canada for the most part. It's whatever one thinks of Argentina over the last 35 years, Argentina is very good at moving stuff around, whether it's internally or to port.
I did read something about the Chubut provincial law 5001 from 2003, which some people interpret as prohibiting open pit mining and also cyanide use. Is that a framework under which you might face any kind of restrictions?
Yeah, look, I mean, on the cyanide side, we don't face that being a uranium company. The process would be quite different in terms of extraction. On the open pit side, the mandates within the Chubut province in particular had been done over the previous governments. I cannot overemphasize for those who aren't familiar, although it's hard not to see it because it's in news every day. Argentina is an entirely new country with an entirely new management at the top. This is a right-wing, pro-business government. And so from the standpoint of what we're seeing in the province is now run by a group of politicians who want to see these assets developed. I'm aware that over the course of potentially the next month, the provincial Congress will re-examine open pit mining in Chubut. I say that in the context of it's the declared mission of the Chubut government to compete across the country and be a premier mining jurisdiction. They know the assets that we have. They know the assets others have. And I'm hopeful that they make a very significant call that will allow these projects to come to production. And if they don't, then there's other ways to take the resource out of the ground. But we are believers that this government is pragmatic, business friendly, and want to see us succeed. And we know it, and we hear it from them directly. I'm regularly reminded by my wife and kids, I'm not the most important person in the world, but they do treat us very well. They're in touch with us. The governor's in touch with us himself, the mining minister. So we're very, very bullish on what Chubut could bring to the table over the course of the short term.
Does the way you deploy capital depend on that as well? Like, is there a world where you're like, okay, not diverting any capital to, or not deploying any capital into Argentina, diverting all that to Colombia, or are you going to go and, build out a resource regardless?
Yeah, I'd say no at the outset. Every one of our properties has a political framework that allows us to explore. If it changes, we'll be nimble. If it becomes more positive, we'll also be nimble and move resources there. So they are a bit different, of course, but every one of these properties, and that was one of the reasons we picked these ones specifically, was that we wanted to be able to acquire properties that had the potential to do work. We had no interest in properties that would just sit there because you can't. I don't care how much uranium it has in the ground. If you can't work on it, it's useless. And that is not what we acquired.
Yeah. Yeah. When do you think you're going to know more about that, though?
Yeah, look, I mean, these things are developed over the course of months and years. In terms of Chubut, that would be probably the most exciting if something does happen at the government level. We believe that we know the government is contemplating it now. We know that with certainty because we've been part of a group that have submitted reports on it, but we believe that they'll make a decision in short order. These governments see commodity prices and they see shortages, and as I mentioned earlier, they get mandates from the federal government of sort of what the priorities are, and if the priority is to accentuate extraction, then this is how you do it. You make the environment such that companies will go and spend money.
Mm-hmm. So regardless of that, when do you think you're going to have some news out to the market from Argentina?
So I think from an Argentinian standpoint, but what we have coming up is potential to sign hopeful agreements with government entities that have historic data on a lot of our properties. Within that context, we'll also be able to hopefully not only just announce that, but also be able to find some other assets in the area that are very similar to what we have now. On their own, they sort of stand alone, but when they're part of a larger company like ours, we'd be able to have like a regional base of assets that can ultimately feed one central processing plant. So when you look at that, I think we'd be in a great position to deliver some of that news. And ultimately, we'll get into the exploration side, but that'll take some time. But between now and then, I think we have some opportunities to really move the company forward that I'm hopeful that shareholders will place value on as well.
Mm-hmm. So when you think the next time is going to be that you and I are going to be talking about, when you think you're going to have a couple of things to kind of batch on and tell a broader story? Because right now, really, it just is setting the stage. That's what you have, Argentina, Colombia. I get it. When do you think you're going to be able to come back with more kind of concrete data then in that case?
Yeah, I think from an exploration standpoint, we'll be able to have something, there is preliminary exploration that we could get busy on between now and the time when a drill gets synced in. We could do some sampling, we could do some other analysis. So I think that's sort of stuff that you're going to start seeing in the summer. Don't forget our summer is their winter in Argentina. In Colombia, we can do it, almost at any time. So our goal is in the near term, let's start seeing some non-exploration on the ground improvements to how we work and sort of the framework of the company. And then as we move into the summer and towards the end of the year, that's where we start seeing a lot more of the exploration stuff. Of course, permitting permitted.
Hmm. Isn't it year-round work though in both jurisdictions?
Yeah, it is. It is. In part of one of our assets in Chubut, it does snow, so we do have to sort of clear some land there. It lasts about 3.5 weeks, and everybody goes crazy for it. So it's I'd say 99% of our assets are available for us to explore at least 10.5 months a year.
Right. Okay. So not necessarily, you don't necessarily have to have interruptions in the meantime in terms of news releases either. Because I'm just thinking news release cadence, it's important when you're a new company, so on and so forth. So that's where I'm coming from.
Yeah, I mean, as I said, I intend not to disappear from the market. Um, there is news out there that obviously we see the nature of out of sight, out of mind in the sector, and we're pragmatic that I think we have enough things to develop this company between now and when they start selling the drilling that we can do. We call it low hanging fruit. It is there, and what better time to do it when we're not focused on the drilling side.
As an overall risk topic, Steve, do you think running three assets simultaneously across multiple jurisdictions as a startup might be a risk as well? Or would you be looking to grow the staff in the meantime to take care of that? How do you see that potential challenge there?
Yeah, look, management 101 is to surround ourselves with people smarter than us. I think the group we have now, all of them have worked on these properties before, so that's the key advantage here. Our manager in Colombia did his PhD on the asset, on the Berlin asset, and our and our team in Argentina used to work for the CNEA when they had owned these assets. So that's the idea there. We will definitely have to invest in building out these teams if we're going to want to be able to meet the aggressive exploration that we have, that we are focused on.
Mm-hmm. So the G&A you told me about, does that include contingencies for that, or is that just going to come on top?
No, that's in there. I mean, we've made a very healthy budget to be able to hire some amazing people at the exploration side. We know what we're good at the C-suite, and we know what we're not good at. We tend to make sure that we're surrounded by people who, at the end of the day, I get two questions. Number one is how big could it be and how fast you get it online. And how big could it be is going to be from an exploration standpoint, and how fast you can get it online is going to be dependent on how big the asset is. So they're all connected, and yeah, we intend to have a team down there to bring us to a point where 2 years from now, after we spent this $25 million, we're in a point where we've delivered MREs. We're at a point where we've demonstrated, hopefully, that this resource could get much bigger. We've demonstrated to a point that some of these historic production assets can come back online. So over time, as our needs evolve, we'll definitely be bulking up wherever we need to, and that's in our budget.
Mm. Well, part of the speed also depends on infrastructure and topography. I know you touched upon on infrastructure a little bit, but tell me more about that. Between the three assets, again, you can maybe kind of take me through them one by one. Topography and then infrastructure.
Yeah, so in Argentina, they're lowlands, they're either valleys or large desert areas, easily accessible. Argentina is quite developed, especially in these areas, so we're able to get there. Whereas in Colombia, it is a mountainous terrain. On one hand, that's actually advantageous because it gives us different access points to what will ultimately, hopefully, be an underground mine. But it is a bit of a different animal. Once you're up there, you're okay. The two companies that I mentioned, Collective Mining and Aris, they're in similar terrain and they've been very successful. Once you get the assets in, especially at the exploration side, you can pretty much set up a base for some time.
Yeah, yeah. How high is the, when you said it snows, how high is that, those projects?
It's not very. It's just the part of the country. It's in the south, so in Chubut. So it's not that it's high. It's just it's the equivalent of almost tundra in Canada. It's that far north. It's that far south.
Right. Oh, okay. Interesting. Good. So drilling costs, what is the, do you have drilling companies committed actually already? Because I've heard that's a bit of a challenge as well.
Yeah,
Um,
it's definitely. I love to chat about this over a beer because I accidentally became the
yeah.
CFO of a drilling company down there, and what that's benefited me for is that I've called all these guys I used to work with down there and said, how's your fleet looking?" And they all tell me the same thing: "We're 100% busy." And I say,
Yeah.
"Oh, come on, don't you remember me? Why don't you give me some rigs?" So after we're done joking, one of the guys, we have enough lead time that we don't need a rig next month. We've reserved two rigs in Argentina already, and in Colombia there are several that are available. So, it's something that, of course, the contractor wants to make sure that our dates are right because they could be drilling elsewhere. But given the lead time we have, and obviously the relationships that I've had over the course of the last 15 years, we're very comfortable that we have that rig supply.
Yeah.
Over time, and this is just sort of conversation point, you're going to see that a lot of contractors are, they're going to start bringing on new supply, and hopefully they have the crews to man them. These are things that they have to figure out, and obviously it will be impacted in the price that people pay per meter, but that's the nature of the drilling business.
Hmm. Well, what kind of price are you thinking that you're going to have to pay?
Um, yeah, it's hard to tell. I think any company in sort of that 200 to 25 $225 a meter range is very healthy.
Yeah. That's all in or just the drilling?
Yeah, I usually would include an assay. Yeah.
Interesting. It's an interesting world, the drillers world in and of itself, and the service world for Explorico is definitely interesting. I know
It's boom and bust for sure.
I know you're probably dying to go and look at your share price and stick to the screen since it's the first day you're trading. But so I'll start working toward wrapping it up here. We've been at it for over an hour. What's the most fair criticism of Jaguar that you've received so far since you've been pitching it?
Yeah, a lot of it is these assets have been there before. Why? How did you get lucky enough to get them? And I say that in the context of there's a lot of assets we didn't get. So the ones we have, it's not like we were batting 1,000. So a lot of criticism is if you have it, why doesn't someone else want it more? And we're going to have to demonstrate that it's as good as we think it is. I think that politically, people are coming around in Argentina. They're mostly comfortable with Colombia. I think a lot of what you're going to see come out, as mentioned earlier, the critical metals deal between Argentina and the United States, that is really getting a lot of people comfortable with where things are going down there. And from a geological standpoint, I mean, it's hard to criticize something that's been in production or has had so much work before with results that speak for themselves. But we're ultimately going to have to make sure we find that too.
Mhm.
And then, of course, it's not a criticism, but something in the back of everyone's mind is, the uranium price by every supply and demand metric indicates it's going much higher. Um, but of course, it needs to do that. So that's more of a longer term thing. We don't control that. But at current uranium prices, given our point of the cost curve, if we're successful to be able to extract those byproducts, then I think we'd be in a great position.
Mm. What's in the back of your mind? What keeps you up at night?
Right now it's lots of shareholders calling because we're a new story. But I worry about making sure we have the right team. Uranium is not. Or let me go the other way. Uranium is new to South America, with the exception of Argentina having done it before, and to some extent Brazil. And I really hopeful. It's not like you're looking for a geologist who knows gold in Canada. It's a specialized team down there, and we have to be able to make sure we find people who know, who aren't going in here and say, "Oh, I'm an expert in Argentina." Yeah, but do you know uranium and rare earths? That's something I think about all the time. So we're working with some universities down there who are developing sort of the next generation of geologists that are going to help the current guys we have now. Time is on our side because it's going to take some time before we have to bulk up. We want to make sure that we put in place a position where we'll be able to get those people.
Hmm. Well, It's been an interesting conversation. I think this about does it for an overview. What's your most fair criticism of me? What did you come here hoping to talk about that I failed to bring up?
I'm not 100% sure how you like your steak, but
I'll take
assuming
it medium
assuming
rare.
okay, so we get along well. No, I appreciate the candidness of the interview. It's funny. I just came off a 121 meeting marketing for our IPO. We met with
Wow.
120. We had 121 meetings over the course of 3 weeks. And a lot of them are formal, and I find it sometimes difficult to get points across because, you're sticking to a script. You have 22 minutes to speak. You get mixed up, and if you do 10 of these a day, you forget what you said 2 meetings ago.
That's right.
And so anyways, so I'd say it's sort of a reverse criticism. I'm sort of upsetting that we can't do this in barbecue fashion on a more regular basis.
Well, we can, and I am hoping we can have regular updates over time. So I really do appreciate your time and appreciate you doing this. Again, I'll let you go and look at your stock price. But yeah, thanks so much for stopping by, Steve. This was
Okay,
fun.
Antonio. Thank you so much. All the best.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."